Good morning, everyone. Good afternoon, wherever you are in the world. We're really glad to have you here today. My name is Dan Clark, and I am representing Zhorse today. And we are very privileged to have Nick Klein with us today. And in a minute, I'm going to let him introduce himself and tell us all about him and what he does. But I met Nick via LinkedIn a while back. It's been almost a year now. I've been fascinated with his organization because he is a risk manager, but he also has loan review and compliance. He outsources the audit function, so he's kind of the chief auditor for his organization too, which is very unique to me. So we're going to explore that a little bit. But Nick, welcome and thank you for joining us.
Thanks, Dan. It's really good to be here.
Why don't we take a few minutes and just let you talk about yourself? Tell us a little bit more about that organization, because I'll tell you, all the people I talk to, this is a unique situation. You've got a lot of pieces of the pie.
Right.
The outsourcing of audit is really intriguing to me.
Okay.
So talk to us a little bit about what you do and how you feel about it.
Sure. Well, thank you for having me on the program. It's nice to be a part of this and to help out and just help communicate what's going on in the risk world with other people. So thank you. Thank you. As far as our, ENB, African National Bank, I've been in this role now as chief risk officer for a little over a year. I do wear a lot of hats. The loan review function, the compliance function, security function, information security function, they roll up through me. And then I do, as you mentioned, I am responsible for the audit function, which we do outsource to a third party. We've had a good relationship with a third party now for probably 15 years that we've been working with a firm. It's interesting because you talk to a lot of larger institutions, and I'm not sure quite what that sweet spot is where it makes more sense to bring it in-house versus outsourcing it. But we've had a good relationship with outsourcing. Actually going through the process right now with our audit plan for 2022. And it's manageable. We make it work. It's not a burden at all. It's good to have a third party that has other banking clients that can provide us a perspective. I know one of the things in your book that you mentioned was adding value as an auditor, and that's something that we appreciate about having a third party is they see what other banks are doing well, and anonymously, of course, can share what they see at some of their other clients.
Now, I want to follow up on that just a minute. Your outside do they focus on financial auditing and reviewing the financials, or is that a different group that you have? And is your outsourced group more of a risk-based or traditional audit company?
Okay, yeah, so we do stipulate between external audit and our internal audit, and they work pretty closely together. So
okay.
the internal group I'm mentioning is very much specific to the risk-based. Let's do an annual review of BSA, annual review of trust, for example. We have situations where we have annual, biennial, triennial reviews based on the risk of that area. And then, we're also continuing to have conversations about what's changed at the bank. What do we need to focus on based on changes in personnel, changes in strategy, growth, and everything else under the sun there.
Excellent. That's interesting. So let me ask you this. This will be interesting to me personally, and hopefully to our audience. You have a lot of hats. How do you bring them together? And at what point do you start assimilating all of the information and kind of see the integration of what one, like InfoSec may tell you something, compliance may tell you something. You're the guy who brings it all together. Could you explain to us a little bit about how you do that? If you can, and you don't have some secret algorithm that you do out there that you work it out.
No, it's a really good question. We have developed a couple of risk committees at the bank, and that's one of the ways we do this. We have 3 risk committees, different areas of focus, but the one high level committee that we have is what we call our ERM governance committee. It's primarily composed of executives with a couple other people as well, and that is essentially it's a strategic committee where we're trying to organize and collect all of the risks that we're looking at and talking about, and trying to identify and prioritize what risks are important right now. What do we need to be talking about? And trying to just prioritize and look at that risk and say, how does this impact us? What are we going to do about it? It's tough, to your point. There's a lot of different things to sift through. But I enjoy that part of my job, is understanding what do we need to talk about? When do we need to talk about it? And even from a risk standpoint, all these different hats, how are we talking to one another and making sure that we have a good team dynamic in order to build each other up and make sure we all have a risk focus as we seek to manage risk throughout the bank.
Yeah, it sounds like your infrastructure is already designed in a GRC mentality kind of
Very much
approach,
so.
bringing it all together, talking about it amongst those who own and can contribute, and then making joint decisions moving forward. And we'll talk more about GRC later.
Sure.
This is not really focused on that yet. I'm really more focused on what risk we're going to be looking at as we go forward. So you have such an interesting perspective with compliance and InfoSec and the audit, and as well as risk management and loan review. And I understand loan review.
Right.
My last job when I was CAE, loan review reported to me, and I had a great loan review team. And that's kind of where I started. I was an underwriter way back when in the 18th century when I started my career. So I always have a very soft spot for credit risk and loan review, and I learned a lot.
Same.
I think you could attest to that.
Absolutely.
I also like your background in the OCC. I remember I used to hate the regulators, and I hated you guys more than anybody, and I'll tell you why. You guys were the smartest. You really were educated. You knew what you were doing. You came in and you always had a great argument of why I was doing something wrong. And I could never win the argument. It pissed me off.
It's hard. I will tell you though, Dan, there are a lot of really good training opportunities out there, and I am so thankful for my time there.
Oh, yeah.
There's so much to learn about banking, and there's some really great programs out there, right? Like ABA has the Stony Year Graduate School of Banking. That's great.
Mm-hmm. Yep.
And my training was 3.5 years working for the federal government in all sorts of different areas. And it prepared me to know a little bit about everything. And it helped me get to where I am now.
Yeah, I grew to love the regulators, and I made some really good friends as I matured personally, and I realized the greatness of the globality of what they had access to, and their educational approach to looking at it and applying it. And when you come across a good regulator, as you know, and they share information, it only makes the whole system better. So I was really impressed as I got older, and I had some really good friends who are currently still regulators and doing a great job. So I like that background too. Your bank is lucky to have that background in you because of what you touch. So they are lucky there. All right, let's get into some interesting stuff. We're coming towards the end of the COVID, and I'm not going to talk about the pandemic because I get on soapboxes and I don't want to do that. What
We've talked about it enough, haven't we?
Yeah. What I really would like to talk about for our audience is maybe what are the 2 or 3 biggest risks you see coming up this year that you guys are going to have to deal with, or you think that we as a nation or a society or as a group in the financial sector are going to have to be looking at this year?
Sure. I've got a couple of things for you that pop out. The one is maybe a very large umbrella is fraud in general. And I think about ransomware, and I think about scammers and just how sophisticated these bad guys are getting. We have spent a lot of time internally working through ransomware, going through tabletop exercises. If we have a ransomware event, what are we going to do about it?
Yep.
Are we going to even pay, or would we even consider paying a ransom? Talking about those types of things. And then, educating our staff and our customers about all these different scam attempts that are happening.
Yep.
There's so much all these bad guys are trying so much every day to try to penetrate our systems, scam our customers out of money, and it just never stops.
Excellent. So that's one. Give me the other 2 that's on your mind, and then we'll go back and we'll talk a little bit about each of these because I have some questions around all of them.
Yeah, sure. So I'll give you 3 more. One is fair lending risks, talent, and then interest rates and the commercial real estate market.
Okay. The fair lending one's going to be interesting because I haven't thought about that. But let's go back to fraud first.
Sure.
One of the things that was kind of an epiphany for me in my last position, back in 2017, I think, I was talking to the head of technology, and we were talking about all of the hacking that goes on, et cetera. And typically in audit, when I grew up, you want preventative controls. You want to stop it before it ever happens. And so for many years in my career, I was thinking and talking to CEOs about where are your preventative controls. This conversation I had with the head of technology was an epiphany for me. He said the most important thing from his perspective was you have to have the right response. We're never going to prevent all fraud. So you need to be able to recognize it quickly, and you need to have a response. So I started auditing to the business's ability to respond
I think that's
rather
great.
than to the preventative. What are your thoughts around that concept that he shared with me? And would you agree with that?
I would agree with you on that. I think it makes a lot of sense. We do have an incident response team at the bank, which is
Mm-hmm.
comprised of all sorts of folks. And I think it's a very well-run group. Our information security officer does a great job wrangling that group together and also
Mm-hmm.
knowing when that team needs to get together. So much of risk is how do you respond in the first hour, 2 hours, 5 hours, 10 hours. And
Yeah,
if you have a good team in place that has a strong leader and knows what to be talking about and thinking about, you can really prevent a lot of damage. You can
good.
correct a lot of things too. You talk about controls.
Yeah,
The corrective aspect is how do we correct it right away to stem the bleeding?
yeah. That's a good. I'd like to hear that. Not that you agreed with me. That is irrelevant. But the fact that you actually talked about the right stuff, stemming the flow, stopping as soon as you can, protecting the
Right.
bank, and then obviously as we see things, we can create some preventative controls so we're ready for the next new one
That's
that we
right.
have to deal with.
That's right.
Excellent, excellent. The fair lending one. That one is you've piqued my curiosity. I know about fair lending, obviously. I have a lot of social concerns around fair lending for a lot of reasons. I tend to be a socially conscientious person,
Sure.
and I'm sensitive to that. But what are the specific risks that you're seeing in fair lending? We're just not doing it enough, or
For me, it's more of the regulatory aspect of fair lending. You
ah,
keep hearing from the CFPB, the FDIC, and with some of the changes that are happening with the
mm-hmm,
interagency regulators, it's something that a lot of people are talking about. The people that we have relationships with outside of the bank are saying, you really got to make sure your fair lending chops are up. You got to make sure your risk assessment's strong. You got to make sure you're keeping an eye on this stuff because it sounds like it's an area of focus for the regulators this year. And I appreciate your comments about being socially conscientious. That's something we want to serve our customers. We want to meet the
mm-hmm.
credit needs of our communities. But what I worry about is there going to be a change in how the regulators are assessing our fair lending risk? Are they going to be expecting us to do more? Are they going to be digging deeper? What is that whole issue between disparate treatment and disparate impact? How does that affect banks like ours? Those are the types of things we're talking about and thinking about, just to say, do we have the right data? Are we talking about the right things so that we're not surprised by anything the regulators might be asking for sometime this year?
Yeah, I remember when I was at a community bank several years ago, it was a big deal. And they were very pro fair lending, obviously.
Sure.
And most management teams are, because you want to
Yeah.
give opportunities to everyone who qualifies. You have the credit background, so from loan review, et cetera. So you're sensitive to that as well. I've always found it to be somewhat onerous to provide information to the regulators. Has that got any easier over the years?
I don't think so. I mean, there's software out there that helps compile some data, but it's
Mm-hmm.
still like a lot of things. I think it's any highly regulated industry, there's going to be so much manual touch that it's hard to have a really easy process to get the stuff to them that they need. And I think that's why you see a lot of the CFPB, for example, does a lot on their own. They'll pull
Mm-hmm.
data that they have versus with the Humdalar and et cetera, versus
Yeah.
going to the banks directly and asking them for it.
Yeah. Okay. Yeah. That's I don't envy you that. And I certainly don't miss that piece of it.
Sure.
But in audit, we used to audit fair lending practices, and it gave me a great opportunity to talk to executives as a chief audit executive, sit down with them and just talk about any weaknesses we may see.
Yeah.
In your role, because you have so many hats, I assume that you have pretty much an open door to the executive suite and to the board.
Yes.
Does that make your job easier?
Boy, that is a really good question. So the way that our structure is set up is we have an executive team comprised of about 8 of us,
Uh-huh.
and I'm structured. My reporting structure is to the board, so I have a direct reporting line to the board.
Oh, nice.
I have the benefit of sitting in at the board meeting, so I get to hear what
Ah.
the board is saying as far as a risk perspective. One of my big goals is to help, understand the board's risk appetite so that we
Mm-hmm.
can then communicate that to the entire organization. So having that access is definitely a help in achieving that risk language, that common risk language that so many banks talk about. So it's been really good in that regard. To have access to the board, and I have a great relationship with the other members of the executive team, and I feel like they take risk seriously, which makes my job easy. There's a couple of teammates of mine that they talk about risk a lot. It's like, wow, like this is for a lot of CROs, this is kind of the dream, that the rest of the executive team's talking about risk and what could go wrong. It's like, boy, my job is really easy.
Excellent.
At least in that regard.
Yeah, and your access to the board is it's remarkable, because a lot of, obviously risk officers do, but chief audit executives don't. And the fact that you are the chief audit executive as well gives you, it's such a nice touch to be able to present all those hats in a conversation with board members.
Sure.
As a CAE, I always was active with the audit committee, which are board members, but it wasn't ever sitting at the board meeting. Maybe once a year I would sit at the board meeting and listen to what is said, but I didn't contribute to that meeting as often as I would like to. So this is nice. It's nice that you have that. That's a very big plus, I think.
Good.
Let's talk about the talent thing. And I know that we've read a lot. People want to work from home. They don't want to go back to the office. There's the people who have started their own businesses. They find it's more comfortable to do this, that. There's a lot of reasons why people aren't going back to the office.
Sure.
Aside from that, what is the talent risk out there that you see that we probably should be concerned about?
Yeah, it's interesting. I was having a conversation with our chief credit officer this morning about how 20 years ago, it seemed like every bank, every mid-sized bank, large bank had its own training program. They hired people out of college, got them well-rounded through a management training program, what have you, and then they stick them somewhere. And then that becomes the talent pool, not only for that bank, but for every other bank in the community. And over the last 20 years, those have mostly gone away. And, we see it a lot. We talk a lot about the talent shortage with credit. We talk about it just in banking in general. That is something where we don't really have that pool to pull from anymore. So there's a little bit more deliberateness that has to go into hiring and training people up. The other challenge I see with banking is it's just not as attractive of an industry as some of the other ones out there. Most people look at I shouldn't say most, but a lot of people look at banks as stodgy, old-fashioned. Well, it's, I don't want to be a teller, but people don't realize how many more opportunities there are in banking. Everybody wants to work for a fintech, or they want to work for a big tech company. And so it's like, well, why would I want to work for the community bank down the street when I want to work for Google? So a lot of it's just the industry, the reputation of the industry at this point. And I think banks have a lot to offer. It's just, how do we tell that story to people that says, yeah, I want to work for a bank?
Yeah, well, as you're talking about that, Nick, I'm actually kind of projecting myself into the next 5 or 10 years. If we don't have talent, what are banks going to look like? Robots, avatars, technology, no real people. That's interesting, because banking has always been a social thing too. It's not just a financial thing, especially in states like Florida, Arizona, where retirees, the time they only see people when they go to the bank, have a cup of coffee and chat with their friends about all the investments they have and all of that good stuff. That's going to be interesting. That's one I had not thought of in that perspective. So thank you for sharing that.
Yeah. And just another thought with the talent piece. I don't know numbers. I can't quantify this in any way, but I have to wonder, with the number of banking, with the number of mergers over the last couple of years, you've gone from how many banks, over 10,000 when I started in banking, to what, under 5,000? How many of that was because management teams didn't have the talent to replace them? They got older, they retired, and they decided, well, we don't have the talent to take over, we're just going to sell out, versus trying to keep themselves independent for another generation.
Interesting. That's some interesting perspectives. Two things you caught me off guard on a little bit: fair lending and talent. So congratulations.
No.
You win the prize. You get to come back and do another webinar with us.
Yeah, awesome. Hey, I'd be happy to.
Let's talk. Okay. Talk briefly about interest rate risk. A lot of our people will not know what that really entails, but I think this is a good moment to kind of educate them a little bit about interest rate risk and why it's important for us as institutions.
Yeah, there's a couple of different things I I think about when it comes to the interest rate risk environment. One is, just the spread between loans and deposits right now. There's so much competition for loans out there right now, and the spread is so low, the yields are so low, and it's compressing margins across the industry. I mean, to have a NIM, a net interest margin over 3% right now is pretty good, just because of all of the struggle with getting attractive rates. It sounds like for those banks that have a lot of variable rate loans, there's some good news coming with 2022 and the likelihood of maybe 3 or 4 Fed rate hikes. But the opposite of that is if the Fed decides they have to raise rates really quickly, really fast, that could really impact the market. I mean, it could cause a lot of people to have cash flow struggles. It could cause a significant slowdown in loan demand, and that poses other challenges. So it's how do we prepare for either rates maybe staying the same or really ramping up if inflation doesn't slow down. If there is a nice steady increase, I think that's probably the best scenario for banks.
Interesting. I liked when you said the spread between loans and deposits. I was looking at some data the other day, and it seems like regionally there's a difference in the amount of deposits that financial institutions are taking in.
Oh, yeah.
Any insight into why that might be, and what is the general sense from your perspective on whether Americans want to save? And if they want to save, do they save in banks or do they go elsewhere because the rate of return is better?
That's a good question. I think something that we didn't even bring up is how, especially among the younger generations, how many of them are investing that money in Bitcoin and Ethereum instead of in a bank. And I'm not sure if that's what you were getting at, but it's a good question. I can tell you on our end, we have had so many deposits that, our balance sheet has just grown and grown. We keep thinking that deposit rates are going to slow down, and then we keep getting more in. So, it's led to some good conversations about what we do with all that cash. But I mean, it's interesting to know that there are some regions where maybe the growth isn't that strong, but at least in our market area, it's been very, very strong deposit growth.
Oh, that's good news. Good news. Okay. So you got 4 risks that you're worried about this year that kind of keep you up at night. You're engaged in that. And I know there's a bunch of other stuff that circulates through all the time, but we won't go into all of those.
Plenty of other stuff. Yeah.
There always seems to be that other stuff. So, but let's talk a little bit about COVID, let's talk not about its impact to your organization. What I would really like to know, and I would like our audience to hear, is did the COVID experience change your perspective of risk management? And if so, how did that change? And if not, I'd be interested in why it wouldn't have changed.
Yeah, one of the things that I was thinking about with COVID is not many people predicted a pandemic. Not many people looked out and said, we need to be prepared for a pandemic. So what it did for us is it said, why don't we start thinking about some of the risks that are out on the horizon that could really cause us a problem, and let's just at least talk about it. And I think one of the things that I'll talk about too is this whole shift toward climate risk that we've heard and seen a lot of over the last year. The OCC hired a climate guru, I forget his title, but as a community bank with $1.7 billion in assets, we're saying, this is something we need to start thinking about and talking about. The big banks have a lot more work to do, but we know it's coming. And it might be far out on the horizon, but let's start talking about it so we're not surprised if this, when this starts to really affect us. So with that, it's more of how do we start thinking about risk, not as what are we dealing with in the moment? It's how do we really project out, and how do we just at least put some thoughts together for if we deal with this is how we're going to react. The one thing I was thinking about is we as an executive team at the bank, I feel like we did a really nice job of meeting frequently because of COVID. It really forced us to get together often and say, what are we going to do about this now? What are we going to do about that? This variant, that variant, this shutdown. It led to a lot of meeting and conversation, and it brought us closer as a team, in my opinion. So that was really helpful. The other thing I wanted to mention, though, is, I think the other thing it helped us see is with any risk, there is both a risk and an opportunity to benefit from that risk. And I don't, that sounds bad. How do you benefit from a risk? But when you look at things, there are things we can do to benefit our customers, benefit our, our capital position, our employees, our shareholders. And, with COVID, you have to include PPP in that.
Mm-hmm.
And
Yep.
with COVID, we had to send a lot of people home. We had to do a lot of things differently, but we were able to take PPP and we were able to serve about 1,000 clients. We were able to serve 1,000 different businesses, small businesses, to keep them in business. I mean, PA got hit pretty hard with a shutdown.
Yeah.
Even our real estate market was shut down for a couple of months. So to be able to say to our communities, hey, we're here to help you. We had an awesome team of people that worked their tails off for so much of 2020 and 2021, getting money in the hands of our customers who needed it. And so it's, we're at the point now where whenever we see something that's going to impact us, it's okay, how do we work through it? But then also, how do we use it in a way that's going to benefit us and benefit our communities?
That's great. Let me ask you a tough question.
Sure.
Did you guys in your institution, did you memorialize the lessons learned for future events?
So when you say memorialize them,
is it documented somewhere besides in your brain trust? Is it documented so people say, hey, we need to, next time this happens, this is what we're going to do? Or is it one of those things where, hey, we've talked about it, we all know it, we're all going to be here, et cetera, et cetera. And I don't want to put you on the spot. It's just, it'll be interesting. I ask that question to everybody I talk to because everyone has learned some lessons. Mm-hmm. And as an auditor, I always say, well, where are those lessons? Where's the lesson book?
Yeah, sure.
And
it's a great question. And yeah, I don't have a great answer for you on that one, but that's a very good question and something I need to definitely take away from this conversation. So
it's interesting. Okay, interesting. Okay, cool. We'll move on to something else. Sure. One of the things that I found was really interesting, we'll still talk about the COVID scenario. One, I learned some things that I wish I had have known before COVID so that I could have enhanced my audit program. I'll talk about those in a second.
Sure.
But what I really learned, I tend to be a rebellious auditor. I don't know if you've seen any of the stuff I write on LinkedIn, but sometimes I question what we do. Okay. And I remember when people would all say, oh no, we've never had this before. It wasn't on the risk assessments. We weren't prepared. And now our new risk assessments have pandemics on them. And I would talk to people and I would even write, I say, why would you do that? We've had SARS, we had MERS, we had the Spanish flu back in the day. We've had this event before. Why wasn't it considered in a risk? And maybe we explore more why something is not included that we have a history in humanity of dealing with. Mm-hmm. Why does that happen? That would be a better conversation than just having as an auditor go in and say, put that on your risk assessment. Yeah, so I don't tell people to put things on their risk assessments. I just tell them you should have had it there to begin with. But the one thing that really caught me pretty quickly was, as an auditor pre-COVID, I never worried about supply chain risk. Okay. And then with COVID, all of a sudden, it was so much exacerbated, the situation with supply chain and controls and flows, et cetera. I don't even know how many CEOs were concerned about supply chain. No. What are your thoughts about that? And were there any lessons learned from a risk perspective that touched you from the COVID experience?
Yeah, that's a great question. It's interesting. I'm thinking about the supply chain issues, and it's interesting how there are cycles in our economy where we have gotten so good at being so lean with just-in-time inventory. Yeah. And now what we are hearing is we have a lot of people saying, well, we got to move away from that. We need to make sure we have excess inventory stored somewhere. Mm-hmm. And I don't know if you see it out west, but in Pennsylvania, we've got warehouses cropping up everywhere to help account for some of that in the future. So I feel like the lessons learned, as I see it right now, I feel like the shipping and warehousing industries are taking some good lessons learned. Mm-hmm. As far as banking, though, I think more of a high level, it's just, let's start asking ourselves, what do we need to be thinking about that we aren't? And what we're trying to do across the bank is just to get different representatives throughout every different department to just speak their minds. What are you seeing out there? What do you think could be a risk? What do we need to be talking about that we're not talking about? And I will tell you that does not happen overnight.
Yeah.
But we want to build a culture of risk awareness where it's, hey, this is an issue. I don't remember anybody ever talking about this. Why don't I go to Nick, or why don't I go to our president and just say, hey, what would we do if this ever happened? And like, I can give you a good example. We're in central Pennsylvania. We don't have severe weather, right? We get blizzards in the wintertime.
Yeah.
But we've had more hurricanes go inland, and we actually had a significant increase in tornadoes. Not to the level of Kansas, Missouri, Oklahoma, but very wooded area, very fairly hilly area, just about 10 miles from the bank where I'm at right now. Significant tornado activity, probably 1 or 2 tornadoes a year.
Wow.
And like, that's something we never had to think about before because we don't have tornadoes. So now we have a fairly good business continuity, disaster recovery. And that's one of the risks on our plan, is how do we recover if a tornado happens, or if there's a nuclear explosion, God forbid. How do we handle that?
Yep. Okay, let me ask you another, what I would consider a delicate question. Sure. You don't have to answer it if you don't want to.
Okay.
But it would really be intriguing for a lot of our audience, and it would be intriguing to me. So we talked about COVID impact to your institution or to the financial institution.
Yeah.
Have you guys done anything different with regard to the COVID impact to your business clients? Because they will have the same supply chain and maybe more exacerbated than we would have. Have you thought about that, talked about it, come up with any programs? What are you doing from that perspective in putting our client hat on and saying, you're going to be dealing with this differently than us. What can we do? Loan alleviation, payback schedule. I don't know. There's just so much stuff besides the PPP.
Yeah, sure.
Have you guys talked about that? Is there anything that you're strategizing that you could share?
We haven't had a lot of conversation about the supply chain issues affecting our customers. There have been some issues with residential mortgages and houses being completed. What I'm hearing is there's a lot of challenges in getting vinyl siding, and there's a lot of challenges in getting windows and doors. So that's something that we primarily see on the residential mortgage side. That's something we see we have a couple of builders, not a ton. And so we see a little bit of a slowdown there, but nothing super material, like 6 months, 12 months out or anything like that. What we did with COVID when everything started was we went through an exercise where we identified any customer that was considered a moderate or severely impacted by COVID.
Okay.
And the good news for us is we had a decent number of customers that were moderately impacted, but only a handful that were significantly impacted. So for example,
excellent.
Hotels, entertainment type venues. Those are the customers that really got hit hard. And so we did work with them. I won't go into the details of what we did, but we actively monitored them. We kept in close contact with them and provided relief when needed. But I will say overall, at least central Pennsylvania, we didn't see the same issues that a lot of other bigger cities had to deal with.
Yeah, that's good. That's good news. And it sounds like you guys had a reasonable approach and you were aware of what was going on and its impact. That's good news. Hopefully everybody did the same thing and will be doing the same thing as we go forward. One last note on the residential housing. I have a very good friend. They're building a new house and they said that the price has gone up just from when they wanted to start building to they're now at framing. The price for the materials has increased so much in a 6-month period that it surprised them how much additional they are paying for their house.
It's unbelievable. It's really unbelievable.
Well, we've got plenty of money to give out, so hopefully they will continue to do that. Well, I want to drift maybe a little bit now to GRC, both the mentality and the software. Zhorse is a GRC software and actually their motto is we make GRC easy, and we do. But in reality, GRC is not easy. It's something that's interesting because there's so many pieces to GRC, governance, risk, and compliance. I look at it as an integrated or a complementary risk world. Some people don't believe it's an integrated risk world anymore, and we'll debate that at some point. I haven't got to either side completely, but
Okay.
GRC, what's your thought about GRC? You do it automatically because of the hats you wear. It just
Well,
kind of
sure.
synthesizes it. How do you see your organization dealing with all of the risk and bringing it together at the right point? And the example I would give you is that a lot of institutions I talk to, the chief credit officer understands credit risk really, really well.
Yes.
Sometimes doesn't understand the compliance impact the credit risk may touch, or the operational impact that credit risk may touch, or they may have just a high level understanding of what that risk is. How do you kind of bring it all together for yourself and make sure that the right risk is the driver and the others are the complementary or contributors? What does that all mean to you? And how do we put that in nice English for those of our listeners who want to kind of, I got to get my head around this too. There's
It's a lot.
27 different risk factors. How do I bring them together with the right weighting, the right look, the right perspective? I don't know.
Yeah. I mean, you don't know. I don't know if I know it completely either, but it's certainly worth trying, right?
Yeah.
That's why I really enjoy the job that I have, is because I get to dabble in everything. And I think a lot of it is just having a focus on risk management and just talking about risk management throughout the bank. So one of the things we strive to do, and I can't take credit for this, I learned this from probably multiple consulting firms that I've listened to over the years, is the importance of combining strategy and risk. So banks and any organization worth their salt, they're talking about their strategic plan. How do we create a plan over the next 3 to 5 years that is going to grow our organization?
Mm-hmm.
But what a lot of banks don't do is they don't talk about the risk side of that. We want to grow, but we're not going to talk about how we're going to protect ourselves while we grow. So my overarching point of emphasis for GRC is, let's have a strategic plan, let's have a risk appetite statement that coexist, that sit side by side, where we're talking about both of them. And so we have a chief strategy officer, and he and I work together, that when we communicate results to our executive team, when we talk to the board, we're talking about both. How are we adhering or completing the strategic plan, and how are we remaining within our risk appetite? And I think that's the first start, is understanding that from the board level, tone at the top level,
mm-hmm.
we have our strategic plan, but we've also got our risk appetite, and we're not going to stray from either one.
Yep. Interesting. One of the benefits to a GRC, and I'm more a GRC mentality person than I am a GRC software person. I see software as a tool to help us document and ensure that we have access to information in an aggregate level. That's kind of the way I look at software. And I think that's extremely important. But I find that it works much better if we also have that same mentality of bringing things together and looking at it. So to my earlier question about, did you memorialize your COVID lessons? GRC software would be a good place to memorialize things. True. Because we would have all that information in there. So that's one thought. But how do you guys memorialize what you just expressed? Because I liked what you expressed. Linking strategy to risk. How do you memorialize that, if you do? Or is it just something that is so talked about that it is actually embedded into the being of the organization?
Yeah. Well, that's our hope. We're not there yet where it's fully embedded throughout the organization, but that is something that I'm tasked with doing, and I'm looking forward to continuing to get that risk awareness culture throughout the organization. We do have software that we use. I enjoy the system that we use. We are continually refining it and trying to figure out how we can do it better.
Yeah.
But that is a lot of what we do, and is we are trying to work toward a process where we are meeting with our business unit managers on an ongoing basis to say, hey, let's look at your risks. Let's look at your controls. Do they still apply? And I had a good conversation with somebody today who said, a year ago, this would have been a risk and this would have been a risk. But now that we have this, and this in place, it's not really a risk anymore. We've evolved, we've grown, and now we have different risks. And let's make sure that it's timely and it's accurate and it's forward-looking. And that's how we are memorializing that sort of thing.
Excellent. Let me ask you a question about risk acceptance, since we're talking about risk and all that good stuff. Does your organization accept risk? And if they do, how do you keep track of that as a risk manager, that we're accepting this much risk, it's quantified, it's not quantified, but we have a risk appetite? How does that impact the risk appetite? Walk us through that a little bit and give us a sense of how you guys consider that, if in fact you do accept risk.
We do.
Okay. Yeah, most institutions do.
Yeah.
And they do it, they don't just, it's not an automatic thing. They do talk about it. It's a thoughtful approach. So don't share with us your secrets,
sure.
but what can you share about that concept or the process of accepting risk and then monitoring? And how do we report that risk acceptance to the board?
Yeah, right. I go back to my old OCC days where it was beaten into us: identify, measure, monitor, and control risk. Those are the 4 words. And so that's always stuck with me. And I think that's what it comes down to, is if you can do those 4 things really well, then you can take more risk. And the way that we approach risk here is, we are mitigators, not eliminators. And I heard a guy a couple of years ago, I can't remember his name, but he talked about, the role of a CRO isn't just mitigating risk, it's also optimizing your risk. And it's, how do we build something and pursue an opportunity that gives us the best opportunity to not just mitigate risk, but also to grow the business. And that's always stuck with me a little bit. So how we do it is, just trying to communicate as best we can this idea that we are not in the business of eliminating risk. And I've been using the example the last couple of days about, very, very elementary type of risk where there's a spill in the lobby of your branch. What are you going to do? You can ignore it and just hope it goes away, and then somebody's going to walk in and slip, and you're going to get sued, and there's going to be an insurance claim, and it's going to be this whole long process. You could also go to the other extreme where it's like, we're not going to allow anybody in the bank to have water because we don't want the risk of a spill. And if there is a spill, well, we're going to shut down the branch for 3 hours until we can get somebody to ensure that every last drop is off the floor. Versus, let's just mitigate it. Let's just get a bunch of paper towels, clean it up, and then as it dries, just put out a sign saying, don't walk here. So I see that approach for the entire organization, just to say, we're not ignoring it. We're also not eliminating it. We are mitigating it by making sure that we're talking about the right things, that we're not doing something that we don't take the time to understand what we're doing, and that we're having conversations with people that if something doesn't sound right, we're going to bring it up with somebody.
I love that example. I could see me sitting there watching it evaporate. Say, I'm not going to wipe it up. I'm just going to see how long it takes to evaporate. Right. Do we turn on more heat? What do we do to make it evaporate? Have some tanning lights there.
Yeah.
But no, I love that example. I'm gonna lift that example.
Please do.
I love it.
Please
the spill on the floor. I just love that.
Yeah.
Let me ask you one final question, because I've taken enough of your time today. Sure. Risk messaging to the board. It seems to always be a challenge for people to, how do I message this to the board? What is the best way to communicate with them? Do they really want to know this stuff? You deal with the board. Are there any secrets or tips you could share with our listeners as to how best to communicate risk concerns, or even when we're managing risk well, to board members so that they can continue to be doing what they need to do and providing oversight and governance?
Yeah, it's a great question. The first thing that comes to mind is I like to ask the board questions. If they are, I like the fact that the board is credible challenge. And if they are challenging, I like to understand what it is they don't like, what it is that, they would like to see, because, that's part of the challenge with the board and management is, management's running the bank, but the board is telling us how to run the bank and how to manage the bank. And, one of the things that has helped me as well is just trying to make things really concise and really, really visually appealing to the board. So, our average board packet, I want to say, is probably 500 pages. I know we're not unique. That's most bank boards, but is there a way that we can consolidate a couple of things and say, here's the trend, here's where we're headed. I love the idea of having tolerances in place for most things, and then being able to communicate whether we're within that range or outside of that range. And if nothing else, it gets the board talking. Well, why are we out of this range? Well, this is what's going on. Oh, well, we're okay with that. We're comfortable with that. Oh, well, then we gotta reevaluate. Or why are we over? This is bad. Make sure we do something about this. Okay, well, we do have a trigger in place that if we have a tolerance and we're beyond that threshold, there's an expectation that management is talking about why, what they're going to do about it. And, ultimately the goal there is so that the board can understand why we're in a situation we're in, and then having some discussion about what we're going to do about it.
Excellent. Excellent. So asking questions of the board, making sure that they're engaged in the communication, making sure they get the right information is part of it. Your 500 pages. The last bank I worked at was 900 pages. It's a lot of stuff that and most of the board members go through every page.
Yes, they do.
And it's amazing. So that's good advice. Any final words to our audience about risk and 2022? Are you positive? Are you a bull? Are you a bear? What's your thoughts about this year? I personally, just so not to prejudice you, I personally think we're going to have a great year this year on a lot of levels. I think there's challenges, obviously, but I'm just getting a sense that it's going to be a good year, that we're going to see some progress in a lot of different fronts. What's your opinion and your final, a couple words for us?
Yeah, I don't worry about a bubble bursting this year. I worry about inflation a little bit. I worry about a pullback in the market. No science behind it. Just seems like we're due for a pullback in the market. Is that going to be a blip or something long term? I guess we'll see. The other thing I'll just say, I'm excited for 2022. Obviously, as a risk manager, I'm constantly thinking about what could go wrong.
Yeah.
I don't sleep at night, so the CEO can sleep at night. I would just say if anybody's out there listening that is not in risk management, it's a great career. There's so many opportunities. Yeah. People don't necessarily think about risk management. People think about sales, think about getting in front of customers, but there's some awesome opportunities on the risk management side of things.
I would agree with you. I think it's a great career. I was not an auditor forever. I started in credit risk, and then I went over to the audit side. I was a risk-based auditor. I continue to be a risk-based person. And so I really love that. Thank you for joining us, Nick.
Thank you, Dan.
Nick Klein, a chief risk officer, information security, an auditor, compliance. He's got it all. And I think after listening to him today, we can see that he's absolutely well educated to do this, and certainly has some very balanced understanding of all of the things that impact his organization. I think you're going to be very successful,
Well,
Nick.
Thank you.
Thank you so much.
Thank you. Appreciate being on.